The following is a presentation of TFNN. The Morning Market Kickoff with your host, Tommy O'Brien. Now, Tommy O'Brien.
Good Wednesday morning, everybody. I'm Tommy O'Brien, coming to you live from TFNN just after 9 a.m. Eastern Time. We got markets in negative territory. NVIDIA trading lower. ASML with an outlook a little bit worrisome in the market, and we'll get into it. But you got markets in the red. You see a little bit of a rollover from that spike we had on Wednesday. Pretty remarkable that you're talking about. That was the high right now. We're getting a little bit of a rollover, and look at that volume, right? Drying up. Yesterday it dried up as well. We'll see if we get some follow through. But it was a bit eerie on a price and volume basis. Okay, you check out the S&Ps. We're negative by 1.1% right now. And you look at that bounce we got from the middle of March 13th. You were trading down, and look at, this is a textbook case, folks. If you have my dad's book, Timing the Trade, check out the chapter on quality volume. He would be taking these charts and getting them ready for an updated version if he was coming out with one. It's a textbook case, man. The volume dries up as we rise higher. You accelerate lower. The volume is drying up on this bounce, and we're rolling over. Doesn't mean it's going to happen, but this is a risk-reward probability business, folks, when you're talking about trading. And that is quality volume to the downside to a T right now. S&P's off 1.1%. NASDAQ 100, 1.8%. Same exact scenario, right? Lighter volume, lighter volume, lighter volume, lighter volume. We'll see if we start getting acceleration. You start getting an acceleration when we go south again, watch out in this market. Dow off 155. Dow only off by 0.4%. You have the S&P's off 1.1. NASDAQ off 1.8 right now. Similar action in the Dow, though. Lighter volume across the board on this sustained bounce. And the Russell off by 0.8%. Bitcoin negative by $300. Crude up 63 pennies at $62, we'll call it. Settling a bit for crude. And we ready for gold? Are we ready for gold? You better be ready, man. How about that? $3,325 for the price of gold. And yeah, if you're looking at where this thing might, we're almost there, folks. All right, and we've been talking about on this show, the one-to-one, A to B, C to D expansion from the run that began in February of last year, which was, call it 2000. It's pretty simple math, folks. You trade from about 2,000 up to 2,800. You make the ever most slightest pullback down to a low of 25.41. You add $800 onto 25.41, and you're talking about 33.41. And we just hit 33.34. So doesn't mean it can't go higher, but boy, that is a run right now. We just did another $800 almost in the last 4 months from where we were at the beginning of the year. Gold up $83, record highs. That's a weekly. There's your daily. You talk about it, man. It's not stopping. We get back everything that happened as we were coming into tariffs, and we're at 33.25. We jump to yields, 4.34%. So the fear abating a bit, as in quite the recoil. We're now up 2 full points on the 10-year, as it looked like nobody was buying, and we get some buyers back in that 10-year. What is interesting, though, no dollar action, man. Dollar, 99.59. And here's the thing to consider on a fundamental basis, okay? I love technicals. I just spent the whole beginning of the program talking about technicals and volume, man, and the setup is quality volume to the downside, okay? But pay attention to what is happening in this dollar. The gold market's paying attention to what's happening in this dollar, man. This dollar is weak with a capital W, and help me make sense, okay? Because if you're talking about the trade policies, you're talking about the trade imbalances, right? The trade imbalance, okay, is that we buy more goods from other people than they buy from us. That's the qualm that's at least stated up there, right? We have a trade imbalance, right? We buy all your goods and you can't buy ours because you're tariffing our products. Things have to be equal here. Okay, so then go to the next step. If that's the next step, if you're correcting that trade imbalance, okay, then what should happen? Well, right now, we're buying more of other people's products, other countries' products. If we correct that balance, that would mean they would be buying more of our products, right? Would correct that trade imbalance if that's the goal of what's going on. And I'm not sure it is, but this is laying it out where the market's interpreting. If that's the goal, that they're going to go out and they're going to buy more of ours, then shouldn't that in theory increase the demand for U.S. dollars to buy those? That's where it's going to get interesting. We'll see how that plays out. Great day for some action. We have our man Teddy Kegstad. We interview him Wednesdays at 40 past. He's coming up in about a half hour. We'll talk some dollar with Teddy. Yeah, gold on fire. We jump over to silver this morning. Silver. You see the difference, though. Silver getting back a lot of the acceleration, but boy, the moves lower are more substantial in silver, and the moves higher are less substantial. And you're just back to $32 when we were chopping around at $35 in March and back there in October. Silver continuing to lag gold right now. Could change, but for right now, that is the case, to put it lightly. Okay, let's jump around to the stories of the day. NVIDIA, watch out, baby. 104. Okay, now 104 is basically the low of March 31st. So that's going to be a critical area. You break below 104, that's the low we had in March. That's the low we had at the end of March, March 31st. And right now we're trading at 104.51. You were at 103.65, and you were at 104.77 on those 2 days. You break below there, we get the lows out here. You got volume at the lows. Right? You got volume at the lows in this market, man. Watch out in the news out there. ASML, they have some problems going on, and NVIDIA might pay the price. Yeah. Tech stock sank as government restrictions on the export of NVIDIA chips to China and a disappointing report. So NVIDIA comes out and says it's going to cost them about $5 billion, the tariffs. Okay, they've barred NVIDIA from selling their H20 chips to China, an escalation of the tech battle. Now, we might have a little bit of an off-ramp on China, surprisingly so. But nonetheless... And then ASML delivered on the revenue front. It left investors disappointed at a time when uncertainty will punish results, especially for some of these growth stocks, man. You better believe it, right? ASML's management affirmed long-term optimism. That's the last thing. You want numbers, man. The bookings miss spark fresh debates on whether the AI-driven spending spree from Google, NVIDIA, Microsoft. Yeah, there's a miss there, folks. And with everything else, with China, with NVIDIA, with ASML, excuse me, NVIDIA, this morning, you're going to open down about $8. ASML, you're going to open down $30. Yeah, you got lows out there at $5.78. We go to the pre-market. There's your action on their numbers. We're pushing side 653. We had lows out there of 645. You take a look at a shorter-term time frame, NVIDIA shares. You drive down on that number last night. Whew, man, right? And we're testing those lows at 104. And you can see what the futures did on that news alone. Yeah, the futures, they close, they open, and the market says, uh-oh. And we're at 53.80, and we're actually below that level. We have a move about 53.42 was the lows this morning. We're trading at 53.71. All right, you see the acceleration. Yeah, how about 80 points to the upside? Man, this market, I keep saying in the newsletters, whatever you're trading, get a stop in, get a trading plan in. Make sure you execute that trading plan. Do not let your losses run in this market. You could have been long at certain points in the overnight session and made 80 points, and still the market's down 1%, right? You could have been long overnight at various points, and you had it at most an 80-point run, and meanwhile the market is still negative by 1% with that type of volatility. All right, folks, we'll come back. We'll talk more tech stocks. We'll take a look. S&P's off 56, NASDAQ 100 off 330. We're coming back, folks. Stay tuned. If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
This portion of the Morning Market Kickoff is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC. Welcome back, folks. We get S&P futures. We're approaching lows from that bounce. We'll call it that. 53.67. We're negative by 60 points. But, yeah, the market was lower by about 25 more. We were negative by over 80 in the S&Ps at about 4 a.m. this morning. And we're just trailing off from that acceleration high. NASDAQ 100, pretty similar action. You accelerate higher at 4 in the morning. And we're backing off a bit. And, yeah, you talk about some volatility. We're 250 points off that spike high. Now, let's talk a little bit of China. We're talking that spike high. China's open to talks if the U.S. shows some respect. Like any negotiation, okay? There's more than the headline at stake. And they want to see some steps. Trump out last night through his press secretary saying China's the one that needs to make a deal. Let's let them make a move. We don't have to move. They're the ones that need us. We don't need them. China responds and says they want the U.S. to appoint a person for talks who has the president's support. So they want somebody that can speak for the president in the talks. And, yeah, you get an acceleration. You know, good to see something, as in reaching for a deal of some accord. It is, because it looked like things just escalate in dramatic fashion now. NASDAQ lower. We check out some of the home builders, okay? And these things have gotten pummeled, man. Lennar, you're going to be down. You got a bid ask right around the close, but boy, it's been some max pain. These home builders, man. Folks taking over everything. You know, I got Tiger Construction, we got Tiger Realty, we have TFNN, okay? I see everything now, and boy, let me tell you, man, you know, home builders, the chart says it all, okay? Home prices right now, when you're talking about builders and you're talking about where they get their goods, etc. My dad took a trip over to China in 2019. And thankfully, he didn't become entrenched in that because it would blow up overnight. And it has nothing to do with slave labor for those terms that get thrown around out there. Okay, you're talking about importing, whether it's just building materials. okay? And yes, you're talking about lower costs. There is nuance in between there with lower cost and slave labor. There's both on both ends. Doesn't mean it applies all the time in between when you're just talking about sourcing goods for a lower cost overseas. But man, you look at these, right? D.R. Horton from 100 to 120. Lennar from 100 to 105. KB Homes, no reprieve, from 85 to 50. Now, this is not indicative necessarily of a housing market that's going to collapse. Not at all, okay? Because these companies, they're in the business of building houses and pushing them out to the public at the price they have to, okay? They're not going to sit. I mean, I talk about in where I am, around Lakeland, Florida, you're talking about 1,750 houses, folks, that develop. It used to be beautiful cowland. They're developing about 1,800 houses. It's a combination of Lennar and D.R. Horton, the two of them. The project was so big, one of these companies couldn't undertake it on their own. They split the difference. The two of them developed this area, and they're selling those houses. And what they're going to have to do is they're going to have to cut their margins. Okay, we've seen it happen already in terms of the promotions they have to do, the rate buy-downs they have to do. Okay, they have two options when houses aren't selling at the price they want. They can either bring down the price, which they'd rather not do, or they can basically buy down the rate, which cuts down their margins, okay? They have forecasts that go out for how many houses they're going to sell and the margins that they're going to sell, and they have two options. The last thing they're going to do is say, we can't sell the houses, we're just going to hold them on our balance sheet. Not how these companies operate, okay? They're going to sell the houses. They've been buying down the rates as a promotion to move those houses out. That cuts their margins, which is why you're seeing the decrease. So basically, you're talking about higher cost, lower profit numbers for those home builders. Now, we check that out, and we go to a great article out this morning from Bloomberg. Now, here's what's interesting about this is it starts off, this is talking about housing again, okay? My head's in housing right now, folks. You know, I'm trying to live up to my dad, and boy, he loved housing, and he found quite a market in St. Pete. If you're in the market for anything in St. Pete, give me a call. I'm serious. Tiger Real Estate. Call me, call our man Besford, okay? Now, they're talking about warning of the housing market's days of big gains are over. For now. These gains were remarkable, folks. You better believe that these gains aren't coming back right now. Look at these runs, okay? Home price gains year over year. Now, these are year over year, and they go quarter by quarter. So you have to compound by going 4 months out into the future. But just take, for instance, if you begin where we were in the first quarter of 2020, you're talking about 6%, and then you're talking about 12% on the next quarter, and then you're talking about 18% compounded, okay? So you did 6, 12, and then 18 on top of that. Just if you add it up, it's 36%. You have to compound it because you're getting the big number on the end, and then you're still getting numbers, okay, of 2, 7, and 5. We all know how it adds up, and it adds up to many areas that are pricing homes for 70, 80, 90, 100% more than they were trading in 2019. All right, over a 5-year period. So yes, can you see a little wiggle room for consolidation? You better believe it, folks. All right. I mean, you're getting to the areas right now with yields where they are. That's going to be an important one. All right. But where yields where they are, very difficult, because I'm looking at the costs, man. You have costs that are going up. You're seeing that in Lennar and KB Homes. And so it's going to be a headwind for a couple years, I think, even right here. The one thing that could bring it down is yields. And we're seeing a bit of a reprieve. But boy, you talk about many goods, okay, inputs come from overseas. Now, the one part about this, though, is that they act like it's top forecasters warn, okay? You read this headline and you go, oh, man, is this market in trouble or what? No. Even the worst of the worst don't think it's in that much trouble, folks, okay? You're talking about here cuts for the 2025 forecast of just a 2% increase. Yes, that'd be the lowest gain since 2011. Okay, it's going to trail inflation. You'd actually lose money. But if that's a worst case scenario, that your money's going to go up by 2% and you're worried about the market, go sell some equities and buy some real estate, right? Look at the comparison there, okay? Now, you can get risk-free 4% right now in U.S. Treasuries, okay? So that's the other side of this. But yeah, you're talking about, and I want to get the part You have cuts here from 4.5% to 2 to 3%. Okay, and here it is. Forecasts from nearly a dozen housing and economic experts range from a decline of 1% to a gain of 5%. That's not dire, folks. Okay, the market does need to catch up a bit, though. There are pockets here where when you look at the mortgage costs, you add in, you're talking about taxes, you're talking about insurance, servicing the debt, and then upkeep. It is a big number to rationalize these prices, and you probably need a little bit of a consolidation right now with the price you've had. Doesn't mean it's a dire market, though, when you're looking at forecasts from negative 1% to a 5% incline in those markets. Okay, we're coming back for the opening bell, folks. S&P's negative by 59. NASDAQ 100 off by 345. You have NVIDIA trading lower on the open. Come on back, folks. We'll be right back in 3 minutes.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs? Trade wars? Analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento over the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The dates for this month are April 11th and 25th, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. You have NVIDIA open off about $7 or 6%, trading at 105.30 right now. Forgive me as I jump around here. One more second for me, folks. Pulling something up. All right, there we go. Yes, so S&P's kick things off negative by 51 points. Let's jump over as we open right now. Okay, perfect. NASDAQ 100, we're off by 335 right now, 18,622. Let's jump over to the dollar right now. As I mentioned, we're coming up with our man Teddy Kegstat. We'll talk some currencies. Next segment, 99.51 on that dollar. Right under 100. Can't catch a bid right now, that dollar. We jump over to yields right now. 111.03. And we're talking about a 10-year yield right now of 4.33%. Okay, over in Europe right now, you get the DAX off about 0.6%, FTSE off about 0.3%, CAC Roll off about 0.7%. Over in Asia, Nikkei off 1% right now. Hang Seng off 1.9% right now. Let's check out some of the Magnificent Seven. Apple shares. We catch a lift on the open. Still negative by about 0.8% right now. Amazon shares. All right, off 1.6% right now. Microsoft off 1.5%. We talked about NVIDIA. Off 5.5% right now. ASML on their numbers, off by a similar 5.5% right now. Let's jump over to AMD. Yeah, look at these chip stocks, man. AMD off 6.5%. Oh, boy, look at this thing, all right? You're looking for a channel. That's a pretty well-defined channel. You break above it, but you're talking about trading from $170 to $90, and the trend is on negative prices on AMD out there. Whew, you talk about it. Intel off 2.5% right now. All right. Yeah, so finishing up the conversation when you're talking about prices, you know, it's a little bit doom and gloom out there, but when you look at the talks, it's really not doom and gloom, okay? You're talking about, yeah, you better believe that you need a little bit of a consolidation here, okay? And yeah, they're talking about the different areas of where you could be, okay? In March, median sales price rose 2.5% from a year earlier. That's the lowest growth since September of 23. You back it up, this is the September of 23 you're talking about here, okay? Somewhere in that area. And you see how you lull and rise. I mean, you know, the market, if I was trying to diversify myself right now, folks, with market prices where they are, and neither is doing it doom and gloom, okay? But you look at a market that just peaked, okay? I'm going back to the S&Ps, not Intel. Look at that chart, my goodness. You're looking at this market that just peaked versus a real estate market that peaked 3, 4, 5 years ago, basically. Okay, and you might need a little bit of consolidation in this equity market, especially with the uncertainty we have going on right now, versus the real estate market that's a little bit more progressed in that consolidation. We've already been chopping around for at least 3 years in terms of that real estate market when you accelerated higher towards the end of 2001 coming into 2022, right? The market was on fire. But nonetheless, real estate prices, yeah, and consumers on the backside of that as well. All right, let's talk a little bit of Hertz. You got Ackman, Pershing, he's going into that company, HTZ, and yeah, you talk about a roller coaster ride on this equity, man. Yeah, that's the full acceleration. Pretty remarkable, right? Hertz goes bankrupt. If you don't remember, folks, Hertz went bankrupt during the pandemic. When they came out of bankruptcy, they were actually worth more than they were going into it, because by then everything had turned around. They decided to make a play on EVs, which basically tanked their entire business. But nonetheless, you're up by 12% right now. You were at $2.47, and how about that for an acceleration out there for Hertz? And yeah, looks like at any price you can be a buyer, man. And at $3, Bill Ackman's going to be a buyer. Yeah, I guess closer to $4, right? 12.7 million shares and $46 million. For the amount of money he's managing, it's not a large sum of money, but what I will say is that is a bet that he thinks that Hertz is not going to go bankrupt again. Okay, and yeah, they've been revamping their fleet. And yeah, following an ill-advised bet on Tesla EVs. You know, you talk about Harvard case studies in Harvard business, folks. Try and run the Harvard case study of trying to rent people EVs when they're in a place they're not familiar with, renting vehicles, as in they don't live at home, they're there on travel, and the last thing you need is having an EV where you can't stop and fill it up at a gas station. Simple stuff, right? Simple details sometimes can tank large companies to that degree. Remarkable. All right. All right, let's talk a little bit of World Trade Organization. Because, yeah, This is a level of uncertainty. We're seeing it already today. We're seeing it with NVIDIA, ASML. NVIDIA was one time the largest company in the world, folks. Not today. Okay, but these are not small companies that are just ratcheting lower on some of the uncertainty out here. And the WTO warned that the outlook for global trade has deteriorated sharply. Not surprising, okay? And global trade, we're a huge beneficiary of global trade. Okay, and there's a vast level of uncertainty. I mean, imagine, folks, and I don't have to imagine that hard. Okay, if I'm doing business with any company, let's say it's Vietnam, okay, not with China, because everything's still on hold magnificently with China, but if you're doing business anywhere, Vietnam, Taiwan, whatever you're doing, what kind of investments are you making when you're going to deal with this again in 90 days? I'm waiting 90 days, right? I keep harping on it, but you have to understand when you're making big decisions for long-term growth, making those decisions when you know there's a 90-day deadline looming, that you're probably going to deal with some risk, why would you make it right now? And yeah, there's an opportunity there, right? You make it right now, you're perfectly positioned, there's an easing of tensions, maybe you're the one there to capitalize. That's the reason, okay? For the people that make bold bets early on, that's the reason. But boy, there's a level of uncertainty that's going to cause a lot of people that may have been making future orders, right? Whatever it is. How are you placing an order today that any of those countries are going to send you in 2 to 3 months? And that's how it has to play out sometimes, folks. You're making deals, okay? You're sending them money, and then they ship it on the ships. My dad did it with China, talking about housing. Okay, you send the money over, and then they send you the goods. Are you doing that right now? Whew. Not surprising when you get that type of action going on. All right, we had retail sales out this morning as well. 1.4% in March, greater than expected. Autos, okay? Excluding autos, the numbers were stronger than expected, but sales were only up 0.5%. And I don't blame them. I was on the air. If you were thinking about getting a car, if you still are thinking about a car, go get a car, right? Because guess what? U.S. vehicle supply is falling amid tariff fear buying. I mean, it's not fear buying. It shouldn't even be fear buying, right? This is a proper risk-reward scenario. What is the risk-reward? What is the risk of buying a car right now if you need one? It's not really a big risk buying it right now versus waiting 90 days. Okay, what's the reward? Well, the reward is you lock in the price now and you don't risk. I don't think prices are going down dramatically in a few months, folks. They might stay the same or they might go up. So yeah, buy it right now. The other flip side of that, though, is you're pulling forward demand, okay? These sales are going to dissipate in the future when you're pulling those sales forward. All right, folks, market's popping a bit. We're coming back with Teddy. We'll talk some Forex. We'll talk some commodities. Don't go away, folks.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direction. For up-to-date pricing and performance, go to Direction.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC. Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. We have the S&Ps off by about 0.8%, off 46 points right now, and we got the dollar chopping around dollar right now, 99.557. And folks, every Wednesday, 40 past the hour, we talk to our man Teddy Kegstad. You can check out his outstanding weekly report, the Tiger Forex Report. New issues every Monday, updates throughout the week when warranted. You gain access to an archive webinar. Teddy did in the last year as well. It's only $97, folks. Check it out. You get a 30-day money-back guarantee. And don't forget, under the Services tab, okay, a couple great webinars. You gain access to them. You can access them as many times as you like. They're right on your members page. Capitalizing on time with calendar stock option spreads, and then Japanese candlestick pattern stock and option strategies. And let's get into it, man. Teddy Kegstad, good morning.
Good morning.
Boy, we got quite a market, man. Yields calming a bit in the Treasury market, but the dollar, we're trading at 99.55. Maybe we kick it off with the dollar. What are you watching most in this market, Teddy?
Yeah, it's a sideways week. It's a holiday week. You know, I mean, the numbers aren't. I mean, we had the numbers that came out for the pound this morning were good for their what was it, retail sale? It was not retail sales. They had the CPI, I think, this morning, right?
Okay.
Yeah, that came out pretty much in line. You know, so that the British pound has a nice little breakout to the upside. You know, it started yesterday. You can a little bit of follow through today, but not much. You know, so I mean, you have a higher euro and a higher pound, so that's why the dollar's down. But you know, it's pretty much just reversing the losses that those currencies had against the dollar yesterday. So I think you're kind of in a little bit of a consolidation phase. I mean, however, the euro hasn't made a new high; the pound has versus the dollar. So, but that's just because they've had the numbers to come out and kind of like catch up with that move. So I think that's really what you're seeing right now. There's not, even with the yen, you know, there's not much of pressure on the dollar right now today. I mean, it's on a daily basis. Yes, the pressure is there, but it's not really significant on a trend basis, if you will, you know, and you still have the numbers for Canada coming out, and that's like in another couple of minutes on whether they would do an interest rate move or not. So, I mean, I don't think that's going to really shake up the Canada too much, but that may also add a little weight to the dollar. We'll see. You know, that happens in about, I think, like 5 or 6 minutes or something like that. So, okay. Yeah, as far as it's a holiday week, Tommy, you got to be very careful, you know, as we get towards Friday. You know, I would say that there's probably some morning swings, and after that, be very cautious in the afternoon, especially as you get through today for the rest of the week.
Nice. And yeah, closed on Friday. Sneaks up always a little bit. We got so many front-end holidays in the market. But yeah, Friday for Easter, Good Friday. What do you think about yields where we are right now? Kind of, you know, where the market, we were spiking dramatically. That seems to have calmed a bit. What do you think about that Treasury market in terms of, even interesting in terms of how it's reacting with the dollar a bit? But what do you think? I think we're sitting just above 4.3% right now on the 10-year, something like that.
Right. Yeah, I think, I think that the yields are actually part of the reason why you're seeing this kind of consolidation with the dollar right now. obviously yields are definitely leaning towards retracting than going higher, but they're not really doing much right now. I don't think I think the expectation level right now and the volatility factor for the interest rate market is starting to settle. Now, ironically, though, you got to realize is that on an intraday basis, you're still catching some nice moves in the 10-year and the 30-year. I mean, I have to say, like, volatility has gotten that extreme over the past few months that now you're seeing a very good daily trade. I think that daily trade is going to start to tighten a little bit, as we get through, obviously, this week because it's a holiday week. And I don't think we're going to have anything that's really going to stir it up probably for the next week or so. I think maybe as we get into the May numbers, when those start to come out with the unemployment, and then as we start to get into those numbers, that's when I think you're going to start to see the interest rate market start to really stir. And we might, whether it's going to retract yields or, send them back higher.
Nice. And what about crude? You've had some great calls in that market, man. We bounced a bit last Wednesday, of course, man. I talked to you, and then what time was it at? 1 o'clock, 2 o'clock, something like that. Of course, we got the reprieve. Crude was chopping around 55, 56. We're at $62. Kind of just chopping around since last Wednesday. What do you think of that market right now?
Yeah, I think that's what we're settling into, that kind of a range trade. I think from 62 down to 55. I like that area for the next month or so. I really do. I think that's just as far as being bullish, above 62, no, I think I'd be very cautious with any. I think you'd see a spike high if you see above it, and I don't know what you need, some kind of big fundamental factor that would come into play, and I right now don't foresee anything like that outside of some bad event. Outside of that, I do believe that you're going to probably see pressure on support. As far as how much of a dive you're going to take, I would say it's not going to be that extreme. I like that range right now for the next month or so.
Nice. And what do you think of gold? I got to ask you. We talked about the yen, of course. We talked about the currencies, but man, it's like every day. And we're gold bulls right now at TFNN, folks. Quite a price tag in gold, up another 2.5%, $80, man. And it's interesting that, of course, when you talk about the dollar, right? You got a weak dollar overall. That should be a help to the price of gold. But even as we've chopped around, gold, quite the move. What do you think? $3,300 and change right now this morning at all-time highs on gold. You got any takes there?
Yeah, I still remember when we talked about this a week ago. Remember, I gave you that price target of $33.25. I think that's pretty much where we have a good shot at still spiking up to there, especially with the breakout we had. Today it's a nice little upside move. I would say, wouldn't you?
I would. Listen, we just had have you on last hour, Teddy, and we would have been at $33.25. Well, at 9:10 this morning we were there, but yeah, quite a move, man. Yeah. All right, well, Teddy, I appreciate it, man. You have a great Good Friday. Have a great Easter weekend, man. How's Chicago? How's beautiful Windy City this morning? How are we doing?
You know what? It's actually sunny and nice. It's going to be mid-50s, pushing 60. So we're supposed to be in the 70s on Friday. So I'm looking forward to it. It's going to be a nice weekend.
Spring has arrived in the Windy City. Awesome, Teddy. I appreciate the time as always, folks. Check out that Tiger Forex report. Check out those webinars. Great information, especially in this market with so much volatility. As you said, this volatility. Teddy, I appreciate it, man. Have a great weekend. Have a great Easter. We'll talk to you next Wednesday.
Tommy. Take care.
Take care. Folks, check it out. I know that everybody might not be, extreme active Forex traders, but the level of knowledge that Teddy has in his newsletter, folks, I've learned so much over the years myself, and you get a 30-day money-back guarantee. I guarantee you're going to learn something by signing up for that letter, reading it. You gain access to the archives. You gain access to the webinar that Teddy's done, and you gain access to the knowledge he's putting out. And in this market right now, folks, we talked about it. I mean, whether you're talking about yields, currencies, right, commodities, boy, there is volatility everywhere in this market right now, and we'll see. We got the dollar, 99.56 right now, and as we go back to the market, just chopping around. We're back near the lows with the S&Ps off by 62 points, 53.65. We zoom it in from the open. And a little bit of a roller coaster. We're testing those lows. That's a 1-minute bar. Watch out. Here we go, 53.64. And we got the S&Ps down by 1.2% right now. NASDAQ 100 off by 2% on the dot right now. We check out NVIDIA. Not bad. Nvidia down by 5.8%. Other equities, Amazon off by 1.6%. Apple off by more than 2% right now. Microsoft shares off by 2% as well. Pressure to the downside. One more segment, folks. Don't go away. Come right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Welcome back, folks. And yeah, can't help. Tigers and Tigresses talking some gold equities, new golds. And yeah, double broad. I know a couple of Tigers in this talking about new golds. You know, new gold. Check it out, folks. We pull it up on a weekly. Strong equity, man. Looks like you're heading to 450. Okay, if you're looking for it, you got an A to B leg from the beginning of this run in February. Like the market, you trade up kind of similar to that gold contract, okay? But what I will say is gold's nearing a 1-to-1 completion. Watch the volume on these equities. Whoops. You put it back on a daily. And again, this is new gold, not a monthly. Let's get to a daily, as this market's deteriorating as we speak, folks. And let's zoom in on the action. And the one thing is, you see this volume? You see this volume the last couple of days? Today's going to be an important day. You're gapping higher. But do we get some volume on this move? So be careful. This thing's been on quite a run, man. All right? Quite a run. Yeah. I think I got into some of this at $1.50 in February last year. I was trying to check it out. Let's see, where was I? Yeah, you're talking about $1.24. That was the price last February. And I'm still in it, okay? I have some new gold in there from there. And that I wasn't in the gold report at this time. We don't have it on the gold report. But yeah, you're talking about, $1.24 to $3.81. You're talking about a rise of 200+%. So keep your spikes up in this market. And speaking of spikes up, folks, S&P is rolling over, off by 75 points right now, off 1.4%. NASDAQ 100 off by 2.2%. Excuse me. That's not the type of weekly bar you want to be forming. It's Wednesday. All we have is tomorrow, and then we go for a 3-day weekend. Everybody ready for the volatility? Speaking of volatility, we jump over to the VIX. Slight elevation. We're going back to a daily here. Slight elevation. But yeah, seems to be easing. VIX trading at 31.80 right now, but S&P's off by 76 points, and NVIDIA off by 6%. All the big dogs. Apple off by 2.8%. Amazon off by 2%. Microsoft off by 2.4%. AMD off by 6.2%. Folks, thanks so much for kicking your Wednesday off. I'm actually going to be coming back for my dad's show. We got a direction interview, great program planned, and Jacob's going to be live at 2 o'clock today, leading into that as well. So we got some good stuff. Stay tuned, folks. Basil's up next. Have a great Wednesday, everybody.